But that's not the end of it, right? Because then we're going to start to see TradFi, like proper TradFi do this, meaning banks, asset managers, traditional custodians. So it's really amazing. And I think it's just the beginning of this trend.
With that being said, rolling over into part 2 of today's video breakdown. First, I want to give a shout out to the CYPRX researchers. You guys are absolutely killing it, and big names are starting to pay attention. This honestly gave me chills when I saw this, because it's not every day that you see this from a research perspective. Jeremy Allaire reposted one of Frank's, our head researcher, in his post on the market, banking, and on-chain finance infrastructure, which is just super cool. So I said, appreciate you, Jeremy Allaire, for the repost. Shout out to the CYPRX research team for always bringing some of the realest research in the game. This is the time of awakening in the digital age. Those who choose research, knowledge, and discipline now will lead tomorrow. And the reason why I'm highlighting this is because, again, you have so many different resources for crypto information on the internet. You have so many different resources for YouTube channels and this and that. But how many times do you actually see a group of researchers reposted by the likes of someone like Jeremy Allaire, who sits on the World Economic Forum Council, like all these big things that he does, obviously, of course, the CEO of Circle, so on and so forth. This is just a massive confirmation, in my personal opinion, that you guys are in the right community full of researchers and people who are actually putting out information that's good enough for a CEO like Jeremy Allaire to repost and put at the top of his profile, right? Which you guys can see here. So that was really cool to see. That leads me over into a video clip that Osmar had shared as at least I know I was watching the Ondo Summit take place this rising during all the market turmoil, which is kind of just funny. And in the midst of the market turmoil, I want you guys to listen to something that the CEO of Pantera Capital, Dan Moorhead, said at the very beginning of the Ondo Summit when asked the question, where do you see institutions at this current phase, this current moment in time? And he goes on to just talk about how no institutions have any capital allocated to the crypto ecosystem, hardly any, right? Which just shows the amount of opportunities that exist right now as retail traders if we pick the right projects, right? So just take a second and listen to Dan Moorhead real quick. I want to end this call today considering the market environment with a little bit more of an optimistic perspective to keep you guys focused and locked in on what is still coming down the pipeline in the coming months and years ahead. All right, so just take a second and listen.
They're at in terms of their adoption cycle. To some extent, we have pretty material deregulation. I think if you chat with major bank executives in a private room, or asset managers, or really anybody within traditional finance, I think they're actually largely relatively prepared. They've been looking at this stuff for a while. They've been doing pet projects for a while. Do we see that side bet turning into more of a larger scale bet? And what really does that mean? Is that something that's positive, from a crypto perspective, or is that something where, they're going to try to sort of co-opt the narrative, perhaps?
I was on a panel with the heads of a bunch of big, huge, publicly listed alts firms, and almost all of them were super negative on Bitcoin and crypto and had no exposure whatsoever. And this is within the last 12 months. And it's like, that's why I'm so bullish. Like, all these $100 billion crypto or alts firms have zero Bitcoin or crypto. And that's why I'm still so bullish. And that's why I think the next 10 years are so good. And I was on a CNBC thing once, and they were like, hey, Bitcoin's a bubble. I'm like, how can you have a bubble nobody owns? Like, you can't have a bubble when the median holding for institutional investors of both cryptocurrencies themselves or blockchain venture is literally 0.0. So that is why I'm so bullish. And then, Tom and I have been doing this for a long time, and the list of reasons to say no to crypto used to be super long. No custodian, and no this, no that, no regulatory stuff. The SEC is trying to kill it. They're pretty much all crossed off, right? And so that is, such a huge inflection point. We, still need one more bill in the United States, but from then on, there really aren't reasons for institutions to say no, given they have, very little exposure. And then, blockchain as an asset class has a 12-year 80% IRR with a 0.2 correlation to the S&P 500. Like, there's never been a better asset class in history. So it takes time, and everyone's reactionary, and it, grinding them down takes a while, but it's inevitable that big institutions will come into our industry. And I think the regulatory stuff in the US is kind of the last big, reason to say no that'll help them get in.
So, I mean, that to me, considering the current market landscape today, was just huge confirmation. Talking to all these major $100 billion, like that is such a huge number, guys and gals. He said he was on a panel discussion with, I don't remember the number he threw out, but he said $100 billion alt, which is alternative investment firms, right? And all of them, he didn't say a handful of them, he didn't say a couple, he said all of them have 0.0 allocated to crypto. That is massive, massive. Because what happens, what does the market look like when that changes? When that becomes 0.0% allocated to crypto to 5% allocated to crypto or 10% allocated to crypto. We don't even need 100%, just 5 to 10. Okay. That is where we are at right now. And so that is why I said, let this sink in, considering where the market is at today. Huge opportunity. Institutional money is ready to come in. They are just waiting for regulation. So the question is can you hold out strong enough mentally in your portfolio enough physically to wait for that to unfold? I know I can, and I'm going to be here for when that environment flips and the sentiment shifts. And I hope that each and every one of you guys listening is as well, because it is going to be completely different from the current landscape that we're operating in today, right? So I thought that fit the whole entire narrative today, considering that the market sentiment is completely skewed to the downside. Dan Moorhead, that was such a phenomenal post right there. Just nailed it on the head on how focused we should be and locked in we should be in the coming months ahead, regardless of the current risk-off environment. The best part about it is, in this community, considering everything I went over and everything that we've touched on since the market pulled back in October last year when we called the top, okay? That's not to say that we sold the top, but I remember that Zoom call we had on October 6th where we called this market pullback. We've known the whole entire time why crypto valuations are down. The best part is unlike other community members and other people out there, we're not freaking out. We're seeing it as an opportunity because we know what's happening behind the scenes. Let me show you guys some more proof that is exactly what's taking place. So shout out to, I don't remember if it was Osmar or Break Free. One of the two shared this in the crypto research section, in the document section. This is Management Intelligence by QTI, 2026 State of Trading Infrastructure. And I just want to focus your attention on a couple of key highlights because it just backs what Dan Moore just said. So right here, it talks about who this white paper interviewed. So it says the white paper analyzes the results of a survey and series of interviews with senior executives at 61 firms operational in trading globally. These were proprietary trading firms, hedge funds, asset managers, bank or trading execution desks on the buy side, and proprietary trading firms, discretionary or quant market makers, and 21% other strategies. So respondents were from Europe and North America and Asia. All right. So just to give you guys an insight on who was interviewed in this document, I'm not going to read everything. There's a whole bunch of good, juicy highlights. I'm just going to kind of stick to some of my key highlights here. And it goes on to say, the maturing of crypto and the rise of cross-asset infrastructure. Survey responses indicate that crypto stands apart from other asset classes in terms of expected growth, while respondents projected moderate increases across equities, fixed income, and FX. Expectations for crypto market data volumes were markedly higher. This expectation reflects more than volume growth alone. It points to a broader structural shift in how institutions engage with digital assets. Increasing regulatory clarity in the US and elsewhere is enabling crypto and tokenized products to move beyond isolated trading environments. Remember, guys and gals, what Yuval Ruse said the other day when I asked him the question, how much of the market landscape right now is driven by trading activity and speculative investing, right? He said well over 95%. I said 95%. He said 95% is being gracious, okay? And it's saying right here in this document that is about the shift. It says right here, increasing regulatory clarity is about to allow crypto and tokenized products to move beyond isolated trading environments into mainstream financial infrastructure right there. Traditional financial firms are launching tokenized securities, blockchain-based instruments, and institutional-grade digital asset services that bridge crypto and legacy markets. At the same time, crypto-native market participants are pushing deeper into regulated markets. The continued growth of Bitcoin, futures, and other crypto-linked products on traditional venues, such as the CME, illustrates how digital assets are becoming embedded with established market infrastructure rather than operating entirely in parallel. The survey responses suggest that many firms are already preparing for this shift. Do you all see that? That is why I keep saying, when this shift happens, we're not coming back down to 2.3 or $2.5 trillion. Okay? Whenever this switch, as people like to call it, happens, the opportunity that we see now in crypto is never coming back to the average retail investor ever again. Okay? And I stand by that. Nobody knows when that's going to happen. Nobody has a crystal ball, but I can guarantee that when we supersede 6, 7, 10 trillion dollars, because that day is going to come, you're going to be one of the people that say, look, I was in crypto some of you guys were here at 800 billion. I know I was. Some of you guys were here at 1.3 trillion, but even still, having the ability to say I was here at $3 trillion market cap is insane. Okay, so I wanted to show you guys that. There was a couple of other highlights. It goes on to say, as firms seek seamless access across both digital and traditional markets, infrastructure decisions will increasingly favor platforms that support unified workflows rather than those that focus on individual asset classes. In this environment, crypto acts less as an outlier and more of a catalyst that is forcing firms to rethink how market data is processed. So I thought that was interesting. Then coming over here, shout out to DeFi Dad for this interview. This was posted 3 days ago, shared by one of the researchers. We have Sun Ragpati, the co-founder and CEO of Veda, and he has two very interesting things to say to you guys here that I wrote down watching this podcast. Now, who is Veda? Veda is the largest vault infrastructure platform in DeFi. And on their website, it says they enable institutions to launch and manage on-chain financial products at scale. They have $1.3 billion in total value locked. They've generated over $75 million plus in yield, and they have over 100,000 users. So I'd say that he's probably in the know to some extent on things that are happening behind the scenes. And the first thing that he says here is that, considering what myself and Aqua and Kev stand for in the DeFi and trying to teach you guys just how to get your digital assets working for you, and even if you're not now, just having that mindset that we never have to sell our crypto assets in the future. We can lend them out, borrow against them, participate in yield generation strategies, and literally retire off of the current digital assets that we have in our portfolio now. If you're not already, you can do that in the future once price appreciation comes, so on and so forth. But this guy specifically says that DeFi will reach billions and millions of people. And then I want to play another video clip where he goes on to talk about that it's not just going to be people and retail traders, that all these banks are going to adopt DeFi, layer ones, blockchains, so on and so forth. So just take a second and listen. Let me play the first video clip.
When you're looking out at like the next 6 months, what are the headwinds that we're facing now? What is the adversity now for DeFi?
So it is like the train has left the station. It is totally inevitable that DeFi will reach millions and billions of people. That is inevitably going to happen. I think the biggest question is who stands to benefit the most from this? Like, is it going to be the core people who've defined DeFi over the last few years, who've done the hard work of experimenting with different smart contract primitives, who've proven those, who've weathered hacks and other kinds of crazy market events? Or is it the biggest financial institutions who have distribution, who have users and customer relationships, who just take this infrastructure, put it where it accrues value to them, and leaves the rest of us in the dust? I think that's the biggest question. It boils down to value capture. But value creation is inevitable. And I think no matter what happens, that's a huge, huge win for the category.
Yeah, I think that you're framing up these like two different scenarios that I've been considering, which is one is that
to that, but I think directionally you're right. These are immensely risky products to try to underwrite yourself. It takes huge amounts of expertise. And the downside of messing this up is like, it's not a bad product experience. It's that your users have lost all their funds, right? You've destroyed your credibility as a business. So I'm directionally with you. I just think it's not obvious that they want to take some of the stuff that's out there in open source. And then I guess to the second point, the concrete traction and commitment that we see from the largest enterprises, like the Robinhoods and the Stripes and the Coinbases of the world, it is just unbelievable, right? Like all of this happened within like 12 months and it came out of nowhere seemingly. So I think this trend is only going to increase. Like we're not seeing this slow down. all of the top fintechs in the world, all the top exchanges in the world are going to be doing this, whether it's building their own stablecoin, building their own L2, integrating DeFi yield products directly into their app experience. But that's not the end of it, right? Because then we're going to start to see TradFi, like proper TradFi do this, meaning banks, asset managers, traditional custodians. So it's really amazing. And I think it's just the beginning of this trend.
So, he mentioned it's not just going to be retail. It's not just going to be centralized crypto exchanges transferring over and integrating DeFi, so on and so forth, but it's also going to be banks, asset managers, some of the largest organizations in the game. So those two bullish statements, millions and billions of people will adopt DeFi and that banks and financial institutions are coming, kind of falls into what I'm trying to show you guys, that we are still in, even after 17 years of the digital asset ecosystem lifecycle, the early innings. All right. Last but not least, I haven't really touched on, the ISO categorization assets in such a while, but I found this article to be of interest considering the current landscape, that this just goes to show, in the midst of all this market turmoil, these financial institutions are building the infrastructure in order for them to adopt these digital assets. The case is a matter of when, not if, right? So February 1st, 2026, this was a cool post to read considering that I have a really fat bag of XDC, and this opens the institutional floodgates to possibly adopt said digital asset. XDC has secured a custody integration with BitGo, the digital asset infrastructure company, in a move that directly addresses institutional barriers to enterprise blockchain adoption. The integration enables regulated custody for XDC tokens. That is huge. That, to me, screams that XDC, to some extent, has regulatory clarity. And USDC on XDC network, providing the infrastructure that corporates, exchanges, and financial institutions require before deploying capital on chain. The integration positions XDC network competitively as enterprises actively evaluate blockchain alternatives to legacy system infrastructure plagued by slow settlement, high costs, and limited transparency. With BitGo's regulated custody, major exchanges and institutional asset managers can now onboard XDC with the same custody standards that are required for traditional financial assets. That leads me to the end of today's call, full circling back to what Dan Morehead said at the beginning. He mentioned that institutions had a whole bunch of excuses as to why not to onboard into the digital asset ecosystem and why not to adopt these digital assets, and those excuses are running out. And he particularly highlighted how previous in market cycles, there was no custody solutions, there was no regulatory infrastructure or clarity. Well, fundamentals like this that just dropped, think about it, this is from 2 days ago. So this is fresh. This isn't new. Institutions aren't just going to jump in right away, but it is happening. And it is physical proof that, in my personal opinion, if we're patient, we have a long-term perspective, and we accumulate the right coin, we are going to win at the end of the day. So many blessings to you guys. I hope that you guys enjoyed that call. If you guys have any questions, make sure to chat me up in the Discord, in the general chat, premium chat, or DeFi chat. But outside of that, that's all that I have for you guys. I'll leave the floor open for any commentary or rhetoric for just a couple of minutes. Don't forget to go back and watch the live trading session from today, as there was some good annotation and notes that I had given you guys on the breakdown portion at the end of the recording. But yeah, outside of that, that's all that I have for you guys. I'll drop the fundamental report in the chat so you guys can read it, and I'll keep you guys updated as we roll into